The slowdown in inflation is unlikely to last. Inflation is above the Reserve Bank's target bracket of 3 to 6%, and with the weak rand making imports more expensive and the drought pushing up food prices, prices will continue to increase, putting pressure on consumers. Between February and March, inflation rose by 0.8%.
Food prices are still higher. As the drought continues, that is going to go still higher. The worrying thing for me is that core inflation stays well above 5%. If you strip off food and fuel costs, it still stays well above 5%, which means inflation pressures are becoming broad-based.
Economists say they expect a peak in inflation later in the year. They say the Reserve Bank will have an increasingly difficult task of balancing rising prices and weak economic growth.
We could see interest rates increases being held off until the latter part of the year because of this decline in the CPI inflation rates. However, they're still likely to increase. If the rand sustains its current gains, then we could see inflation not increasing by less than expected in the latter part of the year, and that means interest rate increases may be limited to about 0.5% over the coming year.
2016 promises to be a challenging year for consumers, with the weak economic growth spelling poor job prospects and increasing prices and higher interest rates wiping off disposable income. Gloria Sefako Musi, SABC News, Johannesburg.